Leaders, real life leaders.
Well, hello, everyone. We are so excited that you're with us. And today we have the guest from the book Profit First for Real Estate Agents. Last week, we had a guest who wrote the book Profit First, Mike Michalowicz. And our guest today decided to do a deep dive, Damon Yudichak, and he's written Profit First for Real Estate Agents. And what we're going to talk about is exactly how to do some really specific things on how to make sure that you are going to be profitable every single month. So, Damon, welcome.
Thank you for having me. It's great to be on the podcast.
So, one of the questions that we have, I think everyone listened to the podcast with Profit First, is they said, okay, what do I do practically? Like, how do I move money over? And what do I do to make sure that I have money? Right now, we're in December, and January is the slowest month for every real estate agent, every real estate company that there is. There's no slower month. And so people would say, listen, I've got admin that I've hired. I've got this person that I've hired. Like, I don't want to start firing everyone because January is a slow month. So practically, how does someone handle that with following the principles of Profit First?
Well, in the traditional method with Profit First, you're doing bank transfers twice a month. Well, sometimes real estate agents have months where they don't have a transaction that closes. So how are you going to move money from your income bank account?
So before you move on to that, explain what does the bank, let's pretend they do have closings coming in on regular month. What does the bank transfers 2 times a month? Explain how that works.
Well, so in the Profit First method, we're going to deposit all your commissions into one bank account, which you could either call the income account, or if you wanted to call it your commissions account, you could do that. And then we're going to take and split that money up based on the 4 ways that you're going to spend money in your business. And there's a bank account for each one of those spending methods. So the first spending method is going to be profit. And profit is money that you're setting aside to reward yourself for running a healthy business. The second bank account would be your owner pay. Now, owner pay is a little bit different from profit. This is what you're going to use to cover your monthly living expenses. Then we're going to have taxes so that when you get to April, you don't have to worry about paying your tax bill. Hopefully, you have a large tax bill because that means that you've made a lot of money. And then the last thing is going to be your business expenses. And what I find is that most businesses, real estate agents in particular, the area where they struggle the most financially is because they're spending too much money on the business expenses. So if we're looking at the first dollar coming into your bank from your commission, let's say it's $10,000, then that would go into your income bank account. And then what we would do is determine percentage-wise how much of your money would go into each of those accounts.
So how many total business accounts?
So there's going to be 5.
5 total. So they have the first one, that's where all the commission income comes in. Correct. Then they have a second one that's called profit, a third one, which is your owner pay, a fourth one, which is taxes, and then the fifth one, which is business expenses. Now, what if someone comes to you and says like, okay, I'm getting charged for every one of these accounts that I'm opening. 5 accounts is a lot to keep up with and manage. What would you say to that?
Well, find a bank that's not going to charge you those fees. And so there's plenty of banks there. I like to recommend a local community bank or a credit union. I'll provide you, Chantel, with a link that you can go to find one that's close to you, to find a bank. The other thing that some banks require is that you have a minimum amount in there. Maybe it's $100, $200. And if that's the case, that's hopefully that's not a lot of money to tie up to have 100 or 200 bucks in there. I did have one bank account where they wanted me to have 2,500 bucks in order to not experience that $14 a month fee. So I went to a different bank.
Okay, so let's put some handles on this. So let's pretend that they had two closings. And just for easy math, we'd have one for $10,000 and one for $5,000. So that $15,000. Actually, let's make it even.
Let's just do the 10,000, right?
Let's just do 5,000, two closings, 5,000 each. We have a total income of $10,000 that they made, and that's all going into their income account. Correct. Now, what is the profit percentage that you, let's say they're just getting started, that you want them to start with?
Well, what I would start off with, I actually like to think of owner pay first, because if I'm not paying myself enough to cover my bills, then I can't be profitable, right? So the first step is to make sure you're doing that. So in that case, I would put half of that money into the owner pay account. So that would be $5,000. And then starting out, I would do 1%, which I think is $100, right? Yep. And then that same amount, the standard amount for taxes is 15%. And then the remaining amount would go to our business expenses.
Okay. So $5,000 would go to owner pay. You're saying just to start,
correct,
just only put $100 in the profit.
Yeah, because $100 should not wreck your business if you're taking that away from your business spending, because you could easily find, and we want to start off with small steps, because a lot of times if you try and do too much too fast, you could cause some damage to the way you're operating your business. Going back to what you said, I don't want to lose all my support staff. $100 shouldn't keep you from continuing to keep them in place.
And then $1,500 for taxes. Go ahead and estimate that.
Yeah.
And then basically you've got another $3,400 that you can spend for business expenses.
Correct.
So then is your goal to say, okay, next month I want to move it up to $200 in the profit, or how do you start?
Typically, I'll do it for 3 months at a time. I mean, and think about this when you're looking at marketing. You want to give marketing a good 3 months to see if you get results, right? And generally, if you try and move too fast, you're going to be having a problem. So generally, I only change the percentage of allocations once a quarter. And sometimes it may take people 18 months to 2 years to get to where their expenses are not that big of a portion of their businesses, unless they make some drastic cuts, which could be necessary, but hopefully it's not.
So back to that scenario. Let's just say someone says, okay, this month I only made, so there's our scenario. We know what our numbers are, but let's say this month we only made $8,000. That's all we made this month. And this whole concept, it's like, okay, we're not in business for fun. So the way that Mike Michalowicz would say is like, okay, that admin's got to go, because if you've got an admin and you're not making money, what we see people doing is month after month, they go, well, I didn't have a good month this month. I didn't have a good month the next month. And here we are 8 months later, and they're paying. I mean, I know somebody a friend of mine at Keller Williams, and they did this exact same thing. They're like, I've spent all this time training all these people, and they just kept on holding on. And they finally got to the place, but now they've lost so much money because this has been going on for about almost a year.
Yeah.
So
and
how long did you let it go?
Well, that gets to, you got to challenge a little bit from the standpoint of where's the best use of your time. But if you're running out of money, you're running out of money. And if you don't have the money in your bank account to afford that expense, then you're going to have to stop spending it, because let's say you're going next month and you lose $3,000 this month. Well, how much more money are you going to have to make in order to just fill that $3,000 that you lost?
Well,
And
I don't see a saving. When you talked about the 5 accounts, you talked about income, you talked
correct.
about profit, owner pay, taxes, and business expenses. I don't ever remember you talking about creating a savings account either.
Well, that I wouldn't want to start at that. I don't really recommend that at the beginning, because if you think about it, 5 accounts could be a lot to do. Just that in and itself could be a big job right there. So you are technically saving when you put money into your profit account and your tax account. It's
Okay,
just
so the profit, we just count the profit. That is, we'll call that profit
yeah,
slash savings. Let's
yeah,
just
you
call it
can.
the
Yeah.
profit slash savings. That makes
Yeah.
sense.
Yeah. So every month, if you see, here's a simple way that I like to recommend people look at their finances. If you look at your bank account, you've got the summary section, you've got a beginning balance and an ending balance. Well, if the ending balance is less than the beginning balance, then financially you're falling behind. Theoretically, we want to have our ending balance be more every month. And so if I'm in a situation where every month I'm further and further behind financially, that indicates to me that I need to make a change now. Otherwise, it could take me a year or two to recover from 2 or 3 bad months.
Yeah.
And so it does require making hard decisions sometimes.
Wouldn't you also say that in your business expenses account, if that account ever, like, you really need to say, okay, I'm going to keep a minimum, let's say, of $1,000 in that business expenses account. If that ever falls below 1,000, then guess what? If I have to fire that admin or fire the other person, I have to do it, because once I get that to this number, we can't, they've got to go. I understand we have to train someone new, but at this point, we don't have the money for them. Do you agree with that?
I would agree with that. And $1,000 is a good place to get to. Ideally, you want to get to where you've got a month of business expenses and maybe even 3 months, because that's one thing that I constantly hear from people is like, when it gets slow, I don't know what to do, right? And then you get, I mean, I've definitely been in situations where I was like, where's my next dollar going to come from? The only way long term to get for that is to make sure that you're setting up enough money aside so that when you get to those lean months, you've got cash in the bank to cover that. Which during the summer, when you have a lot of money coming in, it's very easy to say, I'm going to reward myself for the sacrifice and also enjoy the fruits of my labor. However, if we're not acting like the squirrels and socking some of our acorns away for the winter, we're going to be repeating that cycle. It's something I also see when people run into credit card debt. Sometimes they'll allow that credit card debt to get to 20, 30, even I've seen even $50,000 because they know during the summer they're going to have, some months where that gets all wiped away. But the problem that runs into is they fill that hole, but then they have nothing left to show for it. So we have to systematically make sure we're putting money into that profit account to protect us from when things get tight, because they always will in the real estate business.
Yeah. And I suggest that they should have 6 months of profit
Yeah.
in that profit savings account, plus a minimum of 3 months in that business expenses. So you basically have 2 almost savings, and then never letting that business expenses fall below. So, like, I'm saying $1,000, but honestly, depending on whatever that their month of expenses is, maybe having that be at least 1 month, because the profit first method in accounting is basically directing a percentage of all sales directly to profit before taking out expenses. And that is just a stark contrast to what normal accounting people do. They go, okay, well, if after all the expenses have been paid, if we have a profit, great. This is such a great way. I cannot tell everyone enough. This is how you have to be living life to be able to, especially in real estate, because there's so many highs and lows. You have to go this way. Well, this has been amazing. Is there anything else you want to let people know? Any other tips? Obviously, they need to go download your book so they can have all of them. But any other little tastings that you want to give people that they need to know to get them excited about reading your book?
Well, I would say if you feel like you can't do the 5 accounts to start with, just start with 1 account and have that be that 1% of your pay going into there. And that's something I did when I had my own financial troubles when I started doing this, because when you see money in your bank account growing every month, even if it's an extra $1 or $2, just the process of having a habit of setting money aside every time you get paid, which I like, I refer to that as paying yourself first. When you do that, it changes the way you treat your money. And that gives you amazing results as you continue to do it month after month and year after year.
So I want to talk real quick, because when you said start with 1%, but in real estate, what is kind of the goal? Is it 20% that they should be making, 30% profit? Like, yeah, we're going to start slowly with 1, but where do we ultimately that's reasonable? I mean, obviously there's expenses in this business. Is 20% reasonable? 30% reasonable? What is a reasonable amount?
Well, I've got a chart that gives you the target percentages, and you'll make that available to everyone through your website, Chantel. Okay. And I went through, I'm a CPA as well. And so I've been working with real estate agents for 12, 13 years now. And I went through and looked at all the data I had from the hundreds of real estate agents I've worked with. And I came up with healthy percentages. And if you get to those, then you're going to be able to manage your business. And part of it depends on how big your business is. So think about this. If you're the only one operating the business, you should be able to operate it where you're not spending as much as not as large of a percentage on your business as someone who's got a team of 30 people and a staff and a big marketing budget. So you'll want to download that Profit First target percentages.
Love it. Well, thank you so much for being with us. We're going to put in the show notes right now the Amazon link for Profit First for real estate agents. I really highly suggest all of you guys get that, and you guys stay tuned. We've got another episode coming up actually right now.
Thanks for listening to this episode of Real Life Leadership. If you'd like to get the show notes or access more resources, log on to reallifeleaders.com/podcast to get the show notes from this episode and any other resources we might have mentioned. And also, we'd love to hear from you. Be sure to review or rate this podcast on Apple Podcasts to help spread the word. And if you have any leadership questions you want answered, email podcast@reallifeleaders.com.